Hello, this is Rebecca from Seawolf Sustainability Consulting, and today I have a short explainer about greenhouse gas emissions accounting and what it can be used for. So in summary, greenhouse gas emissions are usually accounted for using the Greenhouse Gas Protocol, which has been around for a number of decades. And under that, various scopes of emissions are defined. Scope 1, Scope 2 and Scope 3. Scope 1 is direct emissions, often within an organisation's control. Scope 2 is indirect, often energy, which is bought or supplied, electricity in buildings, for example. And Scope 3 is indirect emissions, often the largest source of emissions. And in the case of, for example, the financial industry, this would include investing and lending portfolios, where there are organisations or projects that the financial sector invests, lends to, or insures. And often these greenhouse gas emissions are reported at a point in time. So it's a snapshot at a point in time in company accounts, a bit similar to a balance sheet. And it's possible to find these greenhouse gas emissions reported in a company's annual report and accounts by looking up emissions and often just doing a control search. The alternative way, or a different way of calculating greenhouse gas emissions, is to also have lifetime greenhouse gas emissions. So that includes the entire product life cycle of a particular operation, particular project. But generally speaking, this is less typical in more standard reporting for emissions. For the financial sector, there's an additional standard called PCAF, PCAF, and that also has a lot more detailed guidance about how the financial sector can calculate their Scope 3 or financed emissions for lending and investing portfolios. And to the next point, why bother doing all of this? Well, firstly, what gets measured is often managed, as the saying goes. So this is one way of measuring to understand the negative externalities that a business could generate. Secondly, it's possible, once greenhouse gas emissions are counted and estimated, and they're very often estimated with proxies and so on. One way to use this is to inform decision making, and it is an additional layer to include in decision making. And for example, that could include attaching a carbon price, so applying some form of price to those emissions to help guide and better understand decisions so they're more sustainable in the future. I'll leave it here for today. Thank you for watching this short explainer.